Hello everyone, here is Vita Investor and today I am going to show you how newcomers can invest in the stock market, during and after this crisis. Please subscribe and hit that bell to receive more finance and stock market videos. Do not forget to leave a like to support the channel. Before I start talking about investments, I need to ask you some questions. First, do you have an emergency reserve? Do you know what is it? And how do you calculate it? Emergency reserve refers to money you save and you can get at quickly. It is very important to have one because it allows you to cover unexpected costs. Let's imagine a scenario. Your boss fires you and you weren't expecting it. So, how will you pay your expenses while you're looking for a new job? That's why it's essential to have an emergency reserve, because you can use the money to pay your bills. You should not start investing without first having one. Then, to calculate how much money you need to put in your emergency reserve, you first need to know the amount of money that you spend on expenses in 1 month. This includes food, rent, bill, cinema and etc. The formula to calculate it is expenses times months. Then, you have to decide how many months you want to be prepared in case an emergency happens. I would suggest that you put 12 months in the formula, especially since after this virus in which we learned that we can lose our jobs at any moment. I am going to show you an example. Assuming that I spend $5,000 per month on expenses. Then, for 12 months, I need to do 12 times 5,000, which is equal to 60,000. Therefore, my emergency reserve is $60,000. As a result, I need to save this amount of money before starting to invest. After you've managed to save the money for your emergency reserve, we can start talking about investments. Then, let's start from the beginning. What is a stock of a company? Company stock represents a claim of ownership on the assets and earnings of the company. In other words, it is a piece of the company that you own. For example, if I buy Facebook for $212 per share, I am buying a very small piece of the company for that price, which can go up or down. So, Vita Investor, where can I buy shares of a company? The answer for that question is in an online brokerage firm or through a face-to-face broker. However, be careful when choosing a broker because some may not have a license to operate or may have high fees. Then, the best thing to do is to research the best brokers from your country and see the reviews of each one. So, why do I want to invest? You want to invest because you can 5x your money in 35 years by investing in the S&P 500, which has a 10% average increase per year. However, if you beat the market you can 10x your money by investing in high-growth companies. You just need to be careful that 90% of investor can't beat the S&P 500. Before I tell you how much you need to start investing, you need to understand that you can't have any debt. This is because your debt may increase by more than 10% depending on your bank. As a result, it would cut most of your earnings on the stock market. So, if you don't have any debt, I would suggest you to start with $1,000, because most brokers have a fee when you buy a stock and it can even take 1.4% of your money away. However, there are some brokers that you don't pay anything, like Robinhood. Then, you can start investing with less than $500. So, after you saved enough money to invest, you have to decide which stocks you are going to buy. To choose a stock, you have to do fundamental analysis. This consists of finding the value of a company and compare it with the value that is being sold. You have to understand when the company is overvalued or undervalued. For example, if the company is undervalued and you believe that it will grow in the future, you should buy. Before buying any stock, you must know how to analyze balance sheet, income statement and statement of cash flow from a company. Also, you should have some knowledge about indicators, such as P/E ratio. However, do not worry about technical analysis now, because I will teach in the upcoming videos. The last topic we are going to talk about in this video for beginners is about the importance of diversifying your portfolio. When you diversify your investment, you reduce the risk of losing money when your portfolio depreciates. For example, if you have a portfolio with 50% in shares, 25% in real estate funds and 25% in cash, you will have a safer portfolio. This is because when real estate funds depreciate, you will have shares to balance it and vice versa. It is also important to diversify your shares. You have to try not to buy stocks in the same niche. However, be careful and only buy shares of companies that you completely understand. This is the end, guys. Thank you. I will be making more videos about stock market and financial advices. But, before, always remember Warren Buffett quote about the 2 rules. Rule number 1 is to never lose money, and rule number 2 is never forget rule number 1. Do not forget to like and subscribe.